Hello, good afternoon, Mayuresh.
Hey Vivek ji, how are you doing?
Yes, all good, all good.
કેમ છે બહુ ગરમી છે ત્યાં?
Yes, it's a bit hot.
Bombay is searing છે એકદમ અહીંયા. It's
Yes,
crazy.
awesome. I think we have participants also joining in. A lot of them have already joined.
Correct.
Some
એક જ મિનિટ આપો ને. Mahalakshmi, should we let the participants come in or wait for a minute?
Sir, still participants are joining, so we can wait for 1 or 2 minutes.
ठीक है, let's wait for 2 minutes. No issues. Vivek ji, कैसे करना है? We'll keep it for 45 minutes.
Yeah, that should be fine. Like last time, we can go free flow, and if any questions are also there, we can take some audience question also this time.
तो कैसे start करें? We'll start with normal Iran era. Israel कुछ फर्क नहीं पड़ा market पे. We'll start with that.
Yeah. Absolutely.
तो आपका व्यू कैसे है? इलेक्शन में आपको क्या लग रहा है? नेक्स्ट 2 मंथ्स पोस्ट इलेक्शन आप मार्केट कैसा देख रहे हो? यूएस का कैसे आपको दिख रहा है? बॉन्ड यील्ड मूव, मे बी रेट कट्स आर लेसर,
Right.
विल दैट क्रिएट अ सिग्निफिकेंट इंपैक्ट मार्केट में? फ्लोज के हिसाब से एक बार क्वेश्चन वो भी ले लेते हैं.
Yes.
रिटेल और फॉरेन फ्लोज आर क्वाइट स्ट्रॉन्ग.
Yes.
तो मार्केट महंगे हैं, क्या महंगे ही रहेंगे? क्या स्ट्रक्चरल फॉल आएगा जो आ नहीं पाए हैं? दैट फोमो इज स्टिल देयर.
No, I think वही सब common questions है. Even audience I keep interacting, so I think it will be a useful conversation with our audience.
Exactly. Because a lot of people, I'm sure, आपको तो पूछती हैं, मुझे तो ये बारंबार आता है. काफी लोग घुस ही नहीं पाए तो उन्हें कभी एंटर करना. बोले मार्केट का टॉप बॉटम कोई नहीं जानता है भैया. आपका व्यू पॉइंट रिस्क रिवॉर्ड क्या है उसके ऊपर.
Yes.
और गोल्ड पे लेना है विवेक जी की कैसे?
We can take some points on gold also, and overall काफी सारे sectors probably will cover which all sectors are looking interesting
आप
from.
बताइए ना. So I think I'll ask that appropriate question.
Yeah, because that is where I think the most value add will happen for the
So
audience.
you only tell me now, so I'll direct the questions accordingly. Which
Yeah.
sectors you feel can be discussed? Realty?
Yeah, so we'll discuss a lot of capex related sectors, so I'll
So
cover.
capex related sector. उसमें specifically infra, manufacturing, realty, cement.
Yes, so I'll cover. So मैंने क्या किया है पूरा manifesto के around I've just covered the
Okay.
structure.
Okay.
So
तो
I'll
travel
connect the
सब कुछ डाल
dots.
दी.
So हो जाएगा. Yes.
Perfect. So I'll just directly jump to the question only. Okay,
Yes.
capex oriented
I
sectors
think
में
we have already 100 people join in, so I think maybe we can start.
Mahalakshmi, should we start?
Yes, sir, we can start.
Yeah. Let everyone in, no? Right, let's begin. Afternoon, folks. This is Mayuresh Joshi. Hope you can hear and see me as I'm speaking. Just give me a few responses, whether you can hear and see me well. A thumbs up and okay in the chat should be good enough. So we should start ASAP types.
Awesome. I think, yeah, they are.
Yeah, perfect. Great, guys. Thank you so much. You can also see on your screen Vivek Mashrani. We've obviously interacted with him numerous occasions before this. So I'll give a quick introduction about Vivek ji. Vivek ji is a founder and director at Technofunda Ventures, based out of Ahmedabad. And Vivek ji, frankly, does not require any introduction, but I'm still carrying on with the formal requirements needed for this webinar. He's also a budding investing community under his Technofunda Investing. He has served under the Bangalore and London offices of HSBC as an EVP in their investment banking and strategic teams. He's a CFA charter holder and a member of the CFA Society in India and an MBA in capital markets from NMIMS. He obviously writes a lot in terms of a lot of market related publications. He's also actively featured on Bloomberg Quint, Money Control. To his accolades, he also has a best-selling book, which is something which all of you should, in my opinion, read. You Can Compound, and an upcoming book on personal finance as well. So thank you, Vivek ji, for taking time out. I think it's pretty close to market close, but I think thank you so much for taking time out and speaking to us.
No, thank you so much for having me here. And yeah, thoda sa I'm traveling on Saturday, Sunday, so thought, we'll fix it on Friday so that it's much easier. But yes, thoda cut to cut ho gaya aaj. It's just market close and then we are just getting started.
Yeah, but I think जो अपने viewers है सुनने वाले हैं, I think वो राह ही देखते हैं मार्केट खत्म हुए और कोई qualitative बात सुनने मिले. That is why
Yes.
precisely they are here. So let me directly jump to the question, Vivek. I think what happened overnight. A lot of Asian markets were in deep red, as we saw. थोड़ा एक initial झटका बाजार को लगा. But what we saw at the close was phenomenal. So what do you think are the reasons? Are markets resilient to all these news? Is the news gestated? Is there a sharp correction which is expected? If so, what are the levels are we looking at? So कैसे आप देख रहे हैं market construct?
So I think, see, what has happened last 4-5 months, if we talk about, right, there were a bit of jerks. थोड़ा mid cap में बीच में jerk था. फिर in the initial month of March we had a few jerks. थोड़ा December end में भी एक छोटा सा झटका आ गया था on 20th December. So what it looks like is कि now market is kind of becoming more resilient कि भाई ये सब छोटा मोटा आता आएगा. After that, market is bouncing back. So I think slowly that mentality is getting built up that, it's more of a buy and dip if the market is falling, and the corrections are more like opportunity to get in, right? So that is the, broad observation which I feel is playing out in the market. So, anything which is outside India and not too much concerning regarding, the domestic macros, people are disregarding it slowly and they are getting used to it. Another thing is, even for the war में काफी confusion है, right? Whether the war is actually happening. ईरान का statement आता है कि यार यहाँ पे तो कुछ बम गिरा नहीं है, and night you get the statement that we have fired some missiles and so on and so forth from the Israel side. So that confusion is kind of playing out. But broadly, what I see is the consensus, and even I keep talking with investors, the mentality has become more like, buy every dip and it's only going to rise at least until the elections are going to get over. So तब तक थोड़ा बहुत volatility रहेगा, but it's only on the upward side it will go. That is what my sense is.
Perfect. So I think that's a very good way to start off this conversation. But let me play the devil's advocate here. So I was reading a couple of reports जहाँ पे Asian markets को जाना गया था, and they are looking at Indian earnings growth between 12 and 14% for the next 2 years. But they are saying that the Korean markets will grow the fastest, the Taiwanese market will grow the second fastest, the Indian markets will grow the third fastest. But Indian markets will be very, very consistent in their earnings growth because Korea, Taiwan will still have a lot of dependency in terms of semiconductors or tech-related industries. While India is going to be a well-rounded story. और इसीलिए जो valuations है वो थोड़े महंगे हैं आज के तारीख में. So at around 21 times 26 numbers, we are not cheap, not expensive, but ये महंगे रहेंगे. So looking at these two factors, Vivek ji, in terms of how analysts are pegging. एक तो वैल्यूएशन के मोर्चे पे और दूसरा जो प्लेसमेंट है काफी स्टॉक्स के. अगर मिड कैप स्मॉल कैप में आप देखेंगे जो सेबी का डायरेक्टिव आया था, stocks have moved 4x 5x in certain cases. So do you think it justifies that market में structural downside नहीं है और इन्वेस्टमेंट सिलेक्टिवली यहाँ पे करना चाहिए या गिरने की राह देखनी चाहिए? अगर गिरने की राह देखनी चाहिए तो क्या देखना चाहिए विद इन द ब्रॉडर?
Right. See, broadly, we have seen key valuation, of course, in small and mid cap have slightly gone higher. Again, it is backed with earnings growth. So if we see the kind of earnings that are coming, fantastic earning, and some of the companies which were, some of the sectors which are not performing in the last decade, we have seen some amazing, growth in terms of earnings, particularly, all the infra and capex proxies and ancillaries. And we'll probably talk more about it when we touch upon the sectors.
Correct.
But the growth is coming. It's not like the run up in the valuation is in isolation of growth, right? So that is that hedge, that cushion is always there. Second thing, Nifty, if we see, the large caps have not performed that well. It has been very mediocre. In fact, a lot of large caps have not even moved and given negative returns. Say, for example, Page Industry is down like, 30% from its high. While, a lot of small and mid caps are making new all-time highs and they have gone multi-X, as you rightly said. So valuation, of course, is backed by earnings, but for mid and small cap, there are pockets where definitely froth is there. But it is more also from the demand side, right? If we see Indian construct right now, the black money is getting curbed, the cash component it is getting lower, the insurance has been taxed, bond have been taxed. So, Indian investors don't know where else to put for growth. Everything after tax, if you see, it's not meaningful return. And those who have particularly entered after COVID, they have not seen a big drawdown. So they are, always into that sit mode, buy on fall kind of, mentality. And another thing is, broker, the margin requirement and all those things have been tightened. So there is not too much of leverage in the system, which earlier used to happen, right? There is one fall and it 40-50% in mid cap was like a normal fall. अभी वो मिलता ही नहीं है, मतलब we keep waiting कि यार 50% गिरे तो ले, but वो मौका ही नहीं मिलता, right? So that
Exactly.
adds to that layer of demand which is coming up from multiple fronts. So I agree that valuation is probably fair or more than fair in pockets, and some will be extremely overvalued also, but it is for a reason of liquidity also which is flowing in, because there are not much of options to play around. But whether we will be first, second or third, that is only market knows, right? We will not be able to predict. वो तो बहुत ही difficult है.
Oh, absolutely. नहीं तो just to have a broad understanding, structural downside आप markets के लिए देख रहे हैं, just a very broad understanding.
So I see that, for small and mid cap, there could be a, around 15-20% correction anytime. Probably after election also, there could be some profit booking. Ke bhai, haan, this is like whatever we thought will happen, that has happened. And, it is more of a sell on news kind of thing which might play out. When it will happen, we'll not know. But yeah, that kind of, froth correction is also healthy in my view, if that happens.
Perfect. How are you looking at the global scheme of things, Vivek? Because when we started January, a large part of the expectations was that the Fed will start cutting rates by June. And the expectation was that there will be 4 rate cuts. With the presumption that as the Fed starts cutting, RBI will also start cutting. Now, as we are coming at the close of April, and as data points are coming through, the number 4 has now come to around couple of rate cuts with a lot of uncertainty in terms of data. And you've seen how the US bonds have moved to 5%. So will this create some sort of an uncertainty in the markets, specifically looking at US markets?
Oh, yes. So US is a very uncertain, like in terms of even directionally how they have gone, it is very uncertain in terms of interest cuts also. But I think as an Indian investor, we should not worry too much about it. Of course, if there is more rate cuts, more money will come in, we'll have more liquidity coming in, asset prices will go up, even commodity prices will go up, gold prices will go up. So that is naturally going to happen. But I think I don't see a sharp, reversal in terms of the stance, because whatever has happened has happened. I think now the directionally it should be on the lower side only. I don't see rate moving up from here anytime very soon.
Okay, but जहाँ तक rate cuts का सवाल है, has the market gestated that? Now is the market comfortable with 2 rate cuts if that happens in the US?
I think so. Matlab, I don't see there will be major jerk due to that news inside the Indian market at least.
Fair enough. Because जो arguments आते हैं विवेक जी was that rate cuts अगर ज्यादा आते हैं और आरबीआई भी रेट कट करता है तो बैंकिंग फाइनेंशियल सिस्टम को अच्छा खासा एक फिलिप मिलेगा. So how do you view that in lieu of rate cuts, the banking and financial system per se in India? Large caps, small caps, NBFCs, what is that?
Yeah, so that liquidity will definitely help, right? That is very natural. But India directionally, what I feel, my sense is, we'll have a stable rates even for next 1-2 years. I don't see a major rate cuts from here on. It's probably like how last 1.5 year has been. That has been like the, stance, I think, for the next 1.5 year also. I don't see there'll be a lot of liquidity being put up in the Indian market for rate cuts.
So then in this situation, how are you looking at the system? And that precisely what my question was.
Yes.
If this is how it is supposed to play out, how do you look at banks, private, public, or NBFCs?
Correct. So private banks, I'm slightly less bullish on right now. The reason being, all the deposits actually are going to mutual funds, right? They are actually starving for deposit. There is no dearth of lending. The dearth is in terms of deposit. So even if they wish, they are not able to decrease their interest rates. So the cost of borrowing has gone up, and the cost of lending has not increased so much. So the NIMs are kind of compressing. So that is the reason if we see the kind of good premium banks, HDFC, Kotak of the world, they are like just into the time correction mode. Plus, the competition has also increased, in a way, in terms of the number of players who are competing for it. And the PSU banks are getting more and more competitive now with all the reforms that are happening. So I feel PSU banks is still a better play versus some of the large private banks, in terms of the growth. Other, thought which will probably more go deeper in terms of sector understanding also is if we see the consumption pattern has kind of changed, so if we see the last decade, it was more of a direct consumption, FMCG, FMEG, your white goods, ACs and furniture and so on and so forth. But now if we see the spending, because of, tightening of taxation and all the changes which are happening, more money is going into the kitty of government rather than staying in the direct consumer's pocket. Okay, so अपने पास कम बचता है, government के पास ज्यादा जाता है, and because of which we have seen a lot of public spending, be it railways, be it infra, be it roads, everywhere, on the public side, the spending has increased. So naturally, that shift in terms of plays for sector also will change. And the lesser the EMI people will be able to take, the lesser the EMI they will be able to take on the consumption side also. So that is my thesis why some of these banks which were playing as a proxy of, say, home loans or car loans or all these consumption related loans like Bajaj Finance might not perform as well as it performed in the last decade. This is more like a structural view. In midterm, something plus or minus can happen. But I feel more and more tightening and more formalization is leading to more and more money going to government rather than, leaving with normal consumers, I feel.
No, absolutely,
Which is a
absolutely
good
got the
news or
point.
bad news, the way you want to see. थोड़ा petrol बचेगा, but then yeah, you can buy lesser of smartphones and all those things, right?
तो एब्सोल्युटली पॉइंट एब्सोल्युटली टेकन. सिर्फ एक पॉइंट आपको ये पॉइंट पे मुद्दे पे आपको पूछना है कि प्रीमियम हाउसेस आर गेटिंग सोल्ड लाइक हॉटकेक्स. विवेक, इस पे आपका क्या कहना है आपको?
Correct. So that is where,
Houses 5
when
crores, 8 crores, 10 crores are getting sold off in a day.
correct.
So
So when the premiumization, so when this formalization happens, right, there will always be a divide, between rich and poor. So the average middle class will get squeezed more, and more formalization will help more and more big CEOs and big businessmen, and that is what I think is playing out in terms of premiumization. And sometimes, even the books are also getting more formal, right? So earlier people didn't have that white money to spend on that real estate. Now because they are forced to pay taxes, right, it is on their books and they can now buy it, which is also good. It is like a circular effect. The more consumption on that side that happens, it also spurs the economy. I feel the divide that is happening is one reason, and second is, that definitely a lot of people have now good white income to spend.
fair enough, fair enough. That brings me to the point. हमारे जैसे middle class often complain करते रहते हैं कि salaried class को कुछ नहीं मिलता है. So I think there will be I think a letter that will go to FM if
No, but I think public spending wise, if we see, all these things might tangibly not feel like a benefit, but
yeah,
better roads will save, petrol, our time. Better railways will help us commute better and do more business and, connect with our family members more efficiently. So that is definitely a good thing. It's a structurally good thing, but it just doesn't feel like we are getting it directly. It's like a different way we need to think about it.
oh, absolutely. No, no, point taken. Now let me jump to the spectrum. I mean, we've discussed global macros as well, but now we are also heading into elections. Our first phase of elections got over. I mean, just started off. So how do you look at the BJP manifesto? 2 months and the results will be out. What's your take in terms of how the markets will react till elections, and if the mandate is as per market expectations post elections as well?
Right. So, see, I think this time, I think we discussed this last time also, but this time the election looks like pretty much a non-event. There is no hoardings anywhere. There are not too
Yes.
many rallies how it used to be in 2014, 2019. There are not too many, both opposition also, I don't see anything, being propagated, and not too many ads on TV, not too many ads on radios, no posters. So I think they also kind of know what is going to be happening, right? So everybody is probably conserving cash on their political funds also. But yes, I think, if BJP wins more than 400 seats and there is a majority mandate which government receives, it will be more like a non-event. That is what I feel like.
Okay.
It will be just ignored and probably some profit booking or some initial euphoria and then profit booking. But then, it will be like a normal non-event kind of situation. And that is what it feels right now also. The market is not too much excited about things. Otherwise, usually there used to be a big pre-election rallies that used to happen, but that's
Right.
not happening. But directionally, if we see in terms of manifesto and the way this government is thinking, I think their focus is predominantly, in terms of continuation and acceleration of the policy which they have already laid off, and which kind of makes sense. If you have done some good work directionally, if you have got some breakthroughs, like if you see on railway side, they've got some amazing breakthroughs. EV, the policy front and the way they've encouraged and the PLI schemes around different sectors, that has played out really nicely. They've focused on, the housing side of it, the gas pipeline side of things. In terms of more, these are more populist measure, but they want to just make sure that that money is also spent rightly, right? So one, they have done more in terms of medical cover, which normal people can get up to 5 lakh, which is kind of proxy of, what you see health related covers in the developed countries. Same way, there was Atal Pension Yojana, and on the top of it, they have added some elements of agriculture and some free food and all those kind of things, which is kind of necessary in the democracy like us, right? Where you have majority of the population, the majority of the vote bank, which wants that kind of incentive. But the interesting part is, apart from that, the majority of the money is going into public good, right? So it is going into more of railways, more of infrastructure related projects, more of boosting the domestic industry, including pharma and those kind of export related industry. Even defense, we are like kind of focusing on export. So I think these same major sectors, be it auto, be it defense, be it railways, be it proxies of capex related stuff, is still going to benefit more and more. So I think they will not have dearth of order books, at least. The execution will be challenged, but how much they want to execute is up to them. Order book, there won't be anything, which they need to worry about. It will be
Oh,
on
no,
them.
absolutely. Absolutely. I think point well broken up. Uh, so, what are the sectors then, Vivek, that you're probably looking at in terms of both the mandate and expectations in terms of the government spend? Are there a, is there a particular subset or a set that you're probably looking at to ride all these trends going forward?
Yeah. So basically, see, as I said, the clear mindset with which overall I'm positioning is, this is not going to be a decade of pure play consumption that used to happen earlier, right? So your FMCG stocks, your white goods stocks, and everything that played out in the last decade is no more be going to be more lucrative this time. It will be much lesser in terms of the growth and prospectus which we'll see. So I'm looking specifically in terms of capex and the proxy of capex, which might not be. See, the problem with infrastructure, real estate, and some of these companies are that they need to bid very aggressively in order to win the projects. And nowadays, the scrutiny and the way the project monitoring happens is very, very strict. So, the wafer thin margins are there. And if they have any cost escalation or time escalation, they are screwed. They will not be able to make good money on the projects which they are executing. So rather than playing a direct play on these players, play proxy play where, there are suppliers of some materials, suppliers of the raw materials to these infra companies. And to break it down into subsectors, one interesting play is your power and power equipment related sector. You have a lot of interesting players there, a lot of MNC players there who have very strong balance sheet, patented products, monopolies or duopolies in some of these products, which is a very, very interesting play if you want to go about it. Second could be, your logistic, the way transportation is going and the economic activity spurs the logistics activity also. So that is very interesting to play. If you want to play EV, again, there are a lot of ancillary plays, right? So your battery players, only two battery players over here. Then you have players who are manufacturing some of the components around it, some shunts around it, a lot of small components which are in the ecosystem of EV. And if we do more homework, there are players who are probably again monopolies, duopolies in this sector. So that I think is a good play. Another one is, some of the defense play. I'm still bullish on defense. Of course, there'll be volatility, there'll be ups and downs, but I think the way structurally we are changing in this sector, uh, there is still long runway. And here also we can think about proxy players. There are some tech players in defense. There are some service providers in the value chain who are low risk and they don't bear the execution risk. So those kind of players also can be looked at. And apart from that, in terms of railways, I think there could be still interesting moves which we might be able to get. So broadly, auto EV side of the things, because we are still very nascent. And if you see China, we are almost like 1/10 of the penetration, and it's only going to go up from here. So EV related plays, CapEx proxies, railway defense proxies. And apart from that, uh, these power related proxies. I think these are some of the very, very interesting plays I'm looking at.
Perfect. So, Vivek, you also are a Technofund investor. You follow MarketSmith and
Yes.
the applications. Any stocks you can discuss if compliances permit, or
Yeah, so we can, discuss some of the examples around these stocks which are,
and you can actually
kind
show
of.
it to the viewers as well if you want.
Yeah, so I'll just share a couple of interesting charts. Again, it will be more like, guys, not a recommendation, but just to see how things are playing out, right? So how strength is there and what kind of plays you can do. Some of them might be, our recommendations to our clients. So please, keep it like uh, with a pinch of salt. So if you see, a lot of these plays, what I want to structurally show all of you guys is some of these plays are, going strength to strength. So if you see plays like ABB, again, proxy of power and the capex, very good strength. Then if you see, one more interesting space which I'm playing, and we have a couple of research reports also published on this, is the transformer place, right? So we have only few players who are catering in this space, and very
Yes.
nice, long uptrend these guys are doing. So likes of say Apar Industry, or you have Voltemp. Recently, we also had one more research report on
Drill.
another,
Drill.
Trill, which
Yeah.
almost, went again. These are very early plays, and it could be slightly risky because they are venturing into new things and very, very early in terms of what they do. But if you see the kind of wealth that has got created, right? Like if you see from 2022 to right now, these are some 4 or 5 beggars. The point I
Exactly.
want all of you to think about is, see, if these are making continuous all-time highs again and again, and if you see the with kind of volume with which it is going, the market is trying to tell us something, right? Where, likes of Page Industry, likes of Nestle, likes of, all these Voltas are not moving so much. But if these guys are moving like this, there is something which market is trying to tell us. So more than, individual stock ideas, just try to think about why market is giving them this kind of premiums. Why, earlier there was no volumes. It was in a big, big consolidation. Why suddenly, after 5, 7 years of consolidation, these companies are making 4, 5 bagger with a huge volume and with huge interest, right? Same way, if you see defense, again, there is a YouTube video also, which I did in almost
Yeah.
September 2020, almost over here. It's there on YouTube. But see directionally how these players have gone, right? So from 320, pretty much it has gone like 7, 8x, and still they
Correct.
are showing strength, still they are, having good volume uptake. Same way, if you see Cochin Shipyard or HAL, the market is trying to tell us something, right? That there is some change that has happened in some of these sectors and how these are moving. Another interesting play of proxy, which we have recommended to our clients very early on in September, likes of construction equipment players or people who are, giving equipments to these infra guys, right? So something like Ace or something like Sangvi Movers, right? So Ace is in our buy list since some time, around 740, we had a buy list. It's almost 2x from there. But you can see the kind of strength and the way these guys are picking up and forming base on base, and continuously they are going on
Correct.
upward, right? So the idea is, try to think around these sectors. Same way there are a lot of interesting plays like Thermex, you have Vabag in terms of water purification space. Also, there are a lot of players. So if these players at simultaneously, they are making some kind of bases, breaking out of it, and the accumulation is happening, volume upticks are great. is something, you need to think about it. Okay. And all the old players, on the consumption side are not doing that great. They are struggling to actually make money in the market. So just think around some of these sectors. Again, in terms of EV, some of the old players who were not able to earlier adapt, now they are starting off, likes of Maruti Suzuki, Eicher Motor, some of the big large cap also, you could find pockets of value where they were lagging earlier, but because they have strength of balance sheet, they can tie up, they can acquire companies, they can also start moving up. So those I think will be great. In terms of uh, EV, I think we discussed power. We have a lot of interesting players. Again, we have Schneider Electric, we have ABB India, we have all these
You want to show that,
play in
Vivek,
terms
on
of
the charts?
transform. Yeah, I'll just show the charts there
Sure.
also. So let me see
And
if I.
also a process that you follow. So I think a lot of guys follow you very well. But what
Yes,
are those trigger points which has prompted you at that point? So when you said that there was a buy area that you recognize, say a few quarters back, what
yes.
were the conditions surrounding that buy area? So a lot of guys who are here or are trying to educate themselves to become better investors will also get a grip on how
Perfect.
you shortlist or select stocks.
Perfect. So I'll take couple of examples, right, which might be our own recommendations also at some point of time. So I'll share the latest one, say IFB, this is in our buy list. But basically what we look at predominantly is first, we want a nice base to be formed and coupled with some kind of earnings trigger, right? So if we see here, this chart, we have a very nice base which is getting formed. And while this base is getting formed, we want to see that on the upper side, I think we discussed this very detailed way in the last
Yes,
session also. On the upper side of the volume, we want to, upper side of the moves, we want to see the volume sink. And whenever there is a flag or a tightening or a fall that is happening, we want to see a shrink in the volume, right? This is how you basically start looking at bases, and then you kind of identify which are all your resistance zone from where, or the pivot zone where the change in direction happened major way, and you kind of draw a resistance line around it. And then the method, two, three ways you can play this. One is, if you see a small base within the base, right? So this, let me highlight it. So if you see a small base within a base and you see a structure playing out where you have a major resistance point and it's trying to break out, you can take a early breakout entry also. Like this is like kind of confirmation that everything is sinking, and then you take a position, early position here. And as soon as the breakout confirms, you kind of add your position. So how we do is we average up, we never average down. So we take a tracking position, sometimes, pre-breakout, and then, the averaging up on the up moves, so that, if really the story plays out, you make it big. If it doesn't play out, you cut the position and cut out very, very quickly. So this is like one of the very live example. We had our research report also in this. Now the metals recently are playing out. I'll just share some of the
yeah. So I was
examples.
exactly coming to this point on metals.
So metals is again, I think, liquidity play and some of these proxy play also, and China is also coming very,
Correct.
very aggressively on this. So if you see Hindustan Copper, almost a similar thing which I was mentioning to all of you played out here. So there was a base formation here. Then there was a small, smaller base within this base, which kind of gave initial sign that it is breaking out. And then finally, this kind of, bigger base which broke out over here. So this was like a first good entry point. This was initial early entry. If you wanted to take, this was a good
Correct.
early entry position. And then still it is, this is like a base on base. So if you see a base, big base, and then there is a small tiny base that comes up. And here also, if you see, there are big wicks on the bottom, which means, all the fall was getting absorbed by the buyers. And then there is a follow-up move. Right now, also, Hindustan Copper, by the way, is in our buy list only. We have not given
Okay.
any sell recommendation on this. But yeah, right now it could be slightly extended, right? So the way you do it is when you enter, you kind of see the nearest support zone. If you are trailing your exit below the support zone, what is the risk you are taking? So right now, if you see on an average around 20-24% risk you are taking, which is kind of too big a risk to take on a weekly time frame, right? So that is how you play out. Same way, we had a buy report on National Aluminium also just to see the chart, the way it has panned out. So this also like created a very nice base. And if you see, there was a volume uptick, there's a pullback, and then again, there is a follow-up move. So this kind of moved almost like what, 40-45% in no time. So the idea is you pick up a sector which is like kind of having some kind of tailwinds. You see a price volume action, and then within that sector, you can identify multiple plays around it. Like if you get so many signals in terms of, say, metal sector or auto sector or a EV sector, kind of go down. It's more like a top-down approach. So one, we see the sector where there is a lot of price volume action, we go deeper. Then we see the charts. Like if it is a shipping company, if we are tracking it, then we go to the chart that, hey, what is GRSE doing? If this is forming a base and this is also nicely coming out, then we check what is happening to our Cochin shipyard, whether this is also like forming the base and making new highs. And if everything syncs up, you kind of can create a basket approach also. That is how also we can play about it.
Perfect, perfect. Very valid points, Vivek. I think just a twofold question to just supplement this aspect. From your initial entry point, what is the perceived stop loss? Is it the nearest moving average? That's one part of the question. And the
Yeah,
second part is, once that you said that you've pyramided up, which is a
yeah.
lot of logic that growth investors apply, including us. As you pyramid up, and if the stocks comes down quite significantly, what is that exit point for the stock? Is it again the nearest moving average? Do those moving averages change from a 21 to 50 or vice versa?
Yeah. So for first, tranche, we always take like a less than 10%. So if it is like a breakout and we have taken after the, a resistance zone, which has got converted into support, we take less than 10% in the initial tranche. So if we are taken, say here, it will be somewhere, around less than 10% over here. If you have taken early entry, like sometimes we even take early entry just around the breakout or even before the breakout. So another strategy, what we do is we take a 0.5% position here, and as soon as it breaks out, we take another 0.25 or 0.75 kind of position. So we basically split the position into pre-breakout and confirmation of the breakout to reduce
Sure.
the risk. But then the overall exit is less than 10% for the first tranche. Second
Okay.
tranche, as soon as we take, we make sure that the residual risk, which means the risk which we took on the first tranche, remains constant. So our exposure kind of doubles, and the risk which we are taking is same by trailing the stop loss. And third tranche onwards, it is always that residual risk become negative. So we only will risk up to the profit which we have when we are taking the third tranche. And after third tranche, I use combination of moving averages, parabolic SAR, and the V-stop. So all three indicators, in a mix match way, which I use. I have combined those indicator and I've created my one indicator which I use. So I just get a green red signal. Whenever it is green, I keep riding it on weekly. Like if we see Ace and those kind of plays,
Yeah.
we were never exiting because it never gave us exit. Same way,
Correct.
our APAR industry, a lot of our subscribers are also riding. It never gave exit. Almost two,
Correct.
three times weekly we
Yeah.
just kept riding. So after third tranche, we don't bother too much about the residual risk because you are already negative in terms of residual risk. Then it is about riding the trend until it keeps going in our favor.
Fair enough. That gives a lot of clarity, Vivek. You said you are not too optimistic on consumption. So I think,
Correct.
are consumption charts absolutely fallen off, or are they not showing strength at all?
So it is more around, either a time correction or slightly, in terms of correction mode. So if we see like one of the leader of consumption page industry, right? This is
Yeah.
like a downtrend. Then if we talk about a few other players, let's say Nestle, right? So Nestle also, you can see like not much of return, hardly, 10-15%
Correct.
move is given in last so many time period.
Correct.
We see other players like, say Voltas has still done some base building. But broadly, if you see, there is hardly any return which the stock has given to us, right? So these kind of, signals us, even if we see symphony kind of plays, which are all past decades winner, they have not done anything, pretty
Exactly.
much in the entire period.
Fair
So
enough.
this is
Fair
where,
enough.
it is more around consumption will stay. See, it's not like, the core consumption is going to go away. We'll still buy washing machines, we'll still buy, better goods. But I think the growth trajectory, which was there in the past decade, where we shifted from a normal Parle G to Britannia biscuits, or a very basic, underwear to this, or, a normal bike to Eicher bike, that acceleration will not get it. So still it will keep growing. There is no problem. India is a consumption story only. But
Correct.
that exponential growth in the short period of time, that acceleration which we'll get is not there, and there is no surprise factor. It's like all priced in. Only if there is like huge growth, like recently, if you see Colgate Palmolive, which was not growing, suddenly 10-15% it started growing. So now, there is some bit of re-rating and it has started moving up. But unless that happens, that acceleration will not get in terms of share price.
Perfect. But what about realty? Just before we take questions from the audience as well. Realty has done exceptionally well as well.
Yeah,
You're
it
not
is
bullish there?
amazing. The formalization in real estate sector has been amazing, and I think that is a good play. But the problem here is escalation of raw material prices. So if suddenly cement prices, suddenly steel prices shoot up, there's hardly any hedge with most of these players. So that is the biggest risk, and any regulatory risk where projects are stalled and some kind of RERA complaints are happening. Those are risk, right? So better than directly playing real estate, I think proxy plays would be still a better play, because higher ROC, good visibility of the growth, and their distribution is already in place. And there also, I think the formalization play is still playing out. So entire consumption, the good part is all these real estate proxies like your tiles player or your piping sector players, all of them are also getting benefited from the
Correct.
formalization that is happening. But only thing is the exponential growth is missing. It is not growing the way they were growing 5-7 years back.
Fair enough. So I think we got a very good idea on that. I have to ask you this question, Vivek. I think, what about gold?
Gold, I think, will remain in the spotlight because the liquidity is increasing, and even these kind of war situation, it's a good hedge. So personally, what I do is at least 5 to 10% of allocation is in gold, and preferably, mix of SGBs and physical gold, because that is the whole purpose of gold, right? Even if you go night 12 o'clock or 3 o'clock, something happens, earthquake happens, we can redeem it, right? So it's still a great asset class, and the returns also will be much better than your FD returns in a long run. So definitely we should have gold exposure. And recently, after the breakout has happened, I'm slightly more bullish on gold after that.
So, 6 digit?
Yes, hopefully. Let's see.
And
And
we
yeah,
endorse
another thing is, rupee depreciation, right? That is also helping gold very, very significantly. So every year, 5-7% depreciation itself is a good, additional return in the gold itself.
Oh, absolutely, absolutely. Now I'll open the questions to the audience because Vivek is a little bit tight on time. I think he has to leave by 4:30. It's already 4:20. So, guys, folks out there, if you've got any questions for Vivek, just put it in the chat. Don't ask any questions which is stock specific. I think some questions he'll not be able to answer. He's answered a lot of sector specific questions. Uh, but generally, I think anything to do with macros, trends, and asset classes, please go ahead with that. So we will just give 30 seconds for the questions to.
Yeah, no problem. Okay, I think there is one question already on what is buy on rumor and sell on news.
Yeah.
So that is, I think, interesting way we are doing, and I feel. And by the way, guys, although I showed you the screen of TradingView, there are a lot of amazing screens which I use from MarketSmith, and couple of screens. What some of the questions you are asking, you will get a lot of insights around it, right? So what I showed you as a breakout, you can actually find it from recent breakout, and I'll just quickly show how I scan very quickly. So if you see there, they give you kind of this preview, and as soon as you see the preview, you will get this bottom volume, how it is going, and the top, what is the price action. So connecting back to Lalit, your question, buy on rumor and sell on news is nothing but, see, most of the times when something is happening or a development is happening inside a company, most of people inside the company would naturally be privy about it, right? If there is a big plant getting manufactured, all the workers will know, their manager will know, their supervisor will know, their relatives will start getting to know. So, there is kind of this insider information or whatever you want to call it, that genuinely, because of that social impact, it kind of starts flowing in the circle that, hey, my company is putting a new plant or new product is coming up. Their relatives will socialize, they know it. And a lot of smart investors who do scuttlebutt, do the groundwork, they will also know, right? They are meeting management, they are meeting distributors.
True.
So what happens is you will see this kind of spike in price and volume, that is typically what we call as breakout. And this will come generally much before the news comes out, right? So the news will come late and the price action will come before.
True.
So the point is, a lot of these smart investors, and if you are also tracking price volume action and using tools like MarketSmith or any other tool which tracks the price volume action, you kind of get that unfair advantage, where you can actually plan it better. And then generally, these smart investors, some of them starts booking profit, and that is where this adage is formed that buy on rumor and sell on news. So initially, when these circles, the things are floating, you buy it and then you sell when actual news comes in, because that is where smart money generally gets out. Again, the time period of that could be slightly longer than we know. It is not just like immediately people will sell, but that is where this adages come in. So you can actually use this tool very nicely in terms of, you know, connecting the dots and seeing price volume action. And another very powerful thing which I use is, the near pivot stock, which is like, if the entire pivot is getting formed, just nearer to the pivot, it kind of gives you the signal that, okay, this is about to break out, or this is kind of completing the base. And you have to just scan through it so that you rule out some of the, you know, triggers which are not perfect, because this is again a mathematical calculation that happens in the back end. But see this, like this Chennai Petro is like a classic example where your base is getting formed. Even in my screen, the sector, it started coming in, petroleum refineries, 83% of the companies are coming in, right? And you have seen like Chennai Petro and Bharat Petroleum and all these are there. And mathematically here also they have started forming like a very nice base, and it is just nearer to the pivot. So
Yeah.
this way, you can actually spot stocks very quickly. And another feature which I use and love is the blue dot, which is where, the strength is increasing. And particularly in the falling market or a flat market, if something is like really staying strong, you can actually hunt a lot of good companies out of it. So this blue dot list, which is the first list, is also very, very powerful, which all of you should definitely use it.
Thanks for that, Vivek. Very, very helpful. And being an ardent MarketSmith fan myself, I think I do follow a lot of these lists.
Yes.
Lalit had a follow-up question on how do you identify sector rotation? How do you identify whether what is turning for a sector?
Yeah, so see, I use my screen where we have basically, uh, price volume action getting captured by sector. So it gives me a percentage of which sector is actually turning around. So right now, if you see petro refineries, power equipment, some of these human resources related companies. So this is how I track it. But you can even use the MarketSmith. There is one, sector industry group rank feature, which you can very, very well use. And they give you the rank which all sectors are coming up, and you can rank those sectors also. I'm not sure if I've gone through the right tab.
Industry ranks, yeah.
This is the one, or it is below?
One sec, one sec. It is
Name is fine.
in the market.
MarketSmith stock screen, right? The rank thing.
You will get the industry groups.
Okay, I think I put some filter or something like that.
So in the markets tab.
Okay, yes, markets tab, it is here. Yeah. So basically, yeah, here is the industry group, which is almost similar to what I showed you. So here, each and every industry and how many number of stocks and what is their rank. So the higher the rank, the higher the price change, the better it is. So you kind of get a sense of where momentum is, and then you can even sort them by the percentage move. Okay. So this kind of, helps you to find out which all sector there is some kind of price volume action, and then you can go deeper into it. So I pretty much use a combination of, all the individual price action to be accumulated into the industry price action. And then I go further down, top to bottom, basically.
I don't know. Thanks for that, Vivek. Again, I think guys go through the MSI page.
Yes,
There are not
there's a
many
lot of
interesting. Yeah,
there's a
exactly.
lot of
Thanks,
insights
thanks,
out
thanks for that, Vivek. Again, Vivek, a very interesting question from Rahul Shah. He said, Vivek sir, just let me pull out this question. Is it possible to generate monthly income directly from the stock market after following weekly charts?
Oh, yes. Like, see, weekly charts are very powerful. And if you see the work of William O'Neill and Mark Minervini and a lot of, the descendants of William O'Neill, I think weekly has been very, very highly emphasized. One, because it's very peaceful. And second, it lets you ride the trend with a longer horizon. So you can, if something works, you can actually make 2x, 3x, 4x of it. And definitely it's much more peaceful. So you should definitely use the weekly for your positional kind of plays versus daily. That is what I prefer. Another thing, I forgot to mention, we discussed briefly last time, but one thing which I do on a weekly chart is just simply following a cup pattern. So if you are just learning technical analysis, and even if you are not too much well versed, one of the very powerful thing which works is like just
Yes.
see a cup pattern on a weekly chart, particularly where the sectors are turning, right? So if you see Zomato, like almost from this 60% cup, you could have easily rode this. Then I would give you the live example, right? So Avas is just like finishing the cup and trying to, form, the base. So these kind of plays, if you do, Policy Bazaar was one similar pay, very nicely it did a cup. And recently, one of the position which I'm holding right now, also it is in my portfolio, is Indus Tower. You can see like how beautifully a simple cup pattern you can actually play this out, right? So keep it simple, keep it on weekly, and if you even use simple patterns, which William O'Neill and a lot of these people like Mark Minerini have done it, it's very powerful. But only thing is you don't force a setup on your stock, right? So it's not that every month you will generate a regular income, a fixed income. Market is something where you need to wait for your setup to play out, and only if there is a trend, only if there is a strength, you should take position. Otherwise, it's better to stay in cash. So yes, it will give you income, but not a regular fixed income like how your salary gives you. Okay, so don't come to the market thinking I'll get my salary from market. You might very well get more than that, but don't force it on your trades. That's the thing I want to let you know.
That's a very valid point raised by Vivek. What Vivek is trying to say is don't leverage yourselves in the market and then bear the brunt if it doesn't work in your favor. So
Yes,
understand your risk reward very, very well.
yes.
Ambika Vivek has a question on the areas of solar. So the question is about solar and any aspects in terms of solar equipment, and any recommendations if you've got.
Yeah, so solar, I think, is one of the very good plays. So yes, I forgot to mention green energy is also one of those capex plays and the infra play, which is playing out really nicely. And I think for a foreseeable future, it will play out. Only risk here, again, what we have seen in the previous cycle of Suzlon and a lot of these players in back in 2008, 2010 era, is that if raw material prices and the execution, goes bad, it might, spoil the balance sheet entirely. So again, here, better to play a proxy play of these, themes rather than playing a direct play. So transformers and those kind of things are a proxy play, right? So
Yeah.
it's better to go that route rather than going direct play, which are having very high execution risk, very high balance sheet risk, and so on and so forth.
Fair enough. Just let me pick up one last question, Vivek, because it's almost 4:30. I know you have to go. Uh, just a minute. Yeah. So I think there's a question from Karthikeyan. There is a talk of QT instead of QE with some rate hike. We discussed this very briefly, Karthikeyan, in the beginning with Vivek. Vivek, you want to touch base again? So how do you see? I mean, a lot of investors globally are feeling that there might be a rate hike, forget a rate cut.
Yeah, so see that is very, very uncertain. I would say may very well happen, but the way the overall trajectory of US has gone, I don't see too many major rate tightening that would happen from here on. But yeah, if inflation and all those things are out of control, it can happen. But I think as a investor, our focus should be, whenever that happens, how to position ourselves. So see, we keep trying to predict market, but never will be able to predict market, right? That is how the nature of the market is. So it's better to play the market trend following rather than, predicting a trend where it will go. So if that event happens and if things go into consolidation mode or there is some liquidity that gets sucked out of the system, it's better to stay in cash at that point of time or move our money into alternate asset class. And something somewhere, will always be in bull run. So it's just that positioning our mind rather than worrying about all these factors to looking at the opportunities is only going to help you as an investor. So if you cultivate that mindset, even when there is, very, very big fear, like even there is war happening or defense, I'm not saying wars are good, but say there is negative fear mongering that is going on. If you think about, how the opportunities are getting created around that event, right? You might be very well positioned as an investor rather than worrying about it. And of course, if there is any negative event, we can pray about it that it becomes good and it doesn't remain like that. But rather than having that fear mongering and being yourself upset and going into negative zone and selling anything prematurely doesn't generally work in the market, in my view.
Fair enough, Vivek. So I think we've almost done an hour, Vivek. We've overshot our time. You had committed time till 4:15. I know I exceeded it by 15 minutes, but chatting with you always, you
Same
lose
here.
favor of time. So,
Same
so
here.
I'll just
Same here.
quickly rewind what Vivek had. The takeaways from today's webinar. One, I think we discussed very clearly in terms of the positioning of the market. Vivek is very, very clear that there might be some element of a pullback as far as the broader markets are concerned. Maybe post elections, after the news is all gestated, there might be a pullback of around 10-15%, maybe 20% in select mid cap stocks. But again, I think Vivek considers that to be healthy. And yes, it is healthy if that corrects, because then markets going in a linear direction is not good for the health of the market itself. So Vivek is very clear in terms of the positioning on how the markets are. The second aspect, obviously, in terms of key sectors. BFSI generally, I think, is a little bit neutral at this juncture. Consumption, he's not too optimistic, and it is reflected because numbers are not playing out to the extent it is. He's very, very gung on capex related stories, right? And he's broken that very beautifully on 7 stories: transformer plays, power equipment, logistics, auto ancillaries and EV theme, defense players, railways, railway components, and green energy. So I think everything to do with capex within these subsectors is what he's discussed. He beautifully discussed a few charts on how he identifies certain triggers for those stocks in terms of your buy points. Have a look at that on what he mentioned. He also defined exit strategies, which are extremely important because risk management as a tool is extremely important from an investment perspective. We discussed gold outside equities, where Vivek feels gold can still continue its good run. Metals selectively, he exhibited that a select few stocks can show strength. And therefore, I think the complete 360-degree that we needed has come in an hour from Vivek and very beautifully explained, both fundamentally, technically through charts as well. And that's why he's called as the guru of Technofunda investing. So Vivek, thank you very much for your time. I hardly noticed how 1 hour passed by,
Well,
but I'm
thank
pretty
you
sure
so much.
let's have a discussion again in May before the results. I will ask you to take your time out because it's always interesting chatting with you. So thank you so much.
Thank you so much. And you have been amazing host and amazing questions that keeps me free flow. And yeah, not a guru. We are all students of markets. So, whatever keenly, I keep looking at charts and, my study on an ongoing basis. This is just like free flowing out of it, because my watch list and everything on a week on week basis are always ready. And I just picked up last week's watch list and I shared whatever insights I got from the markets. And that is what I think collectively as a investing community, guys, we need to do is just be on the top of it, listen to what market is trying to tell us, and automatically I think we'll keep getting newer and newer opportunities. And be a learner, use some of these tools which are so powerful, that saves a lot of time, makes us more efficient. And I've been thankful to MarketSmith, because of which my weekend time gets squeezed and I can spend less time on markets and more time with other things. So thank you so much again, Mayuresh. As usual, it is pleasure and honor to be here on MarketSmith platform with you.
Thank you so much for your kind words. And folks, I think listen to what Vivek had to say. Listen to it carefully, implement that. And yes, I think we are all learning. We're students of the market. And let's keep on learning. Let's keep on growing this tribe as well. So Vivek, have a great weekend till we meet again. To all you folks as well, have a great weekend. till we meet again. Thank you so much.
Yes, all the guys, thank you so much for being till the end. It's like honor to have you here in this session. Thank you so much.
Thanks, guys. Thanks, Vivek. Thank you, everyone. Bye.